WTI oil eases after a 3-day rally, but Hormuz tension keeps a supply risk premium in the crude market. The price action is a tug of war. Traders are taking profit while still watching a waterway that carries about 20% of global oil. The confirmed event is that WTI slipped near $77.80 after a 3-day advance of more than 3%, while Hormuz concerns kept supply risk in focus. The reason this belongs in a crypto news read is that oil volatility feeds inflation expectations, the dollar, energy equities, and risk sentiment that can spill into crypto markets. The opening pressure point is WTI pulls back after a rally against supply fear versus demand weakness. The first confirmed detail is WTI eased after a 3-day advance, and the immediate reason to care is that Hormuz tension keeps risk priced in. That means the viewer should track $77 support and Hormuz traffic, instead of treating the first reaction as the whole story. The verified frame is narrow and useful. The confirmed baseline is a modest pullback after a multi-day rally tied to Middle East supply concerns. The evidence says WTI eased by 0.4% in early Asian trading and traded near $77.80 per barrel. This gives the viewer the factual floor before any larger conclusion is drawn. The two facts that set the baseline are clear. WTI traded near $77.80, and the rally had lifted prices more than 3%. That frame keeps price sits near $77.80 connected to the actual consequence rather than floating as an isolated statistic. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For WTI Oil Eases, the mechanism is the part that decides whether the story has staying power. The mechanism is risk premium versus demand drag. Supply fear lifts prices, but soft demand caps upside. China's uneven recovery, U.S. gasoline inventory builds, and European weakness can offset geopolitical fear. That is why the process behind the event matters as much as the event itself. In practice, risk premium meets inventory data is the hinge between the confirmed event and the next market or user response. The mechanism split is simple. Supply fear adds a premium, while demand softness limits the upside. If that hinge fails, the strongest title-level claim loses force, even if the story keeps attracting attention. The impact lands on a specific group rather than the whole market at once. Oil traders, energy stocks, importers, consumers, inflation-sensitive investors, and macro crypto traders are affected. The practical consequence is a range-bound market where each headline must be weighed against inventory and demand data. If the supply scare fades while demand stays soft, the premium can drain quickly. The useful boundary is that inflation and energy trades adjust, while no confirmed supply break yet. The impact split is energy stocks react to crude swings and inflation expectations can shift with oil. That keeps the impact focused on the people, markets, or systems actually named in the evidence. The unresolved part needs to stay visible. What remains unclear is whether Hormuz tension becomes an actual supply disruption or stays a priced-in risk. That does not prove that a 3-day rally proves a lasting oil breakout. The cleaner confirmation would be confirmed disruptions, tanker reroutes, inventory data, and OPEC Plus decisions would clarify direction. This is the line between analysis and speculation. The unresolved split is no confirmed closure is the key limit, and tanker behavior would change the read. The story can stay important while no confirmed supply break yet remains unresolved, but the stronger claim needs visible proof. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is not vague. Watch the $77 support area, Hormuz shipping signals, inventory data, and OPEC Plus compliance. If WTI holds support while supply risks intensify, the story moves from pullback phase toward range test. For WTI Oil Eases, that follow-through is the test. The trigger split is the $77 area is an important test, and inventory data can confirm or weaken demand. If that trigger does not arrive, the story may stay in pullback phase longer than early attention suggests. If it does arrive, range test becomes easier to evaluate with facts instead of assumptions.